Hello and welcome to Business Daily on Trust Elevation, reaching you from Abuja, Nigeria's capital. I am Chiamaka Nwafo. Let's start you off with some top stories in the business world. Welcome back. Thanks for staying with us. This is still Business Daily on Trust Elevation. Now let's take a look at some of our stock markets, what happened on the floor of the Nigerian Stock Exchange as of yesterday, 25th September 2023. Now, as you can see on our table, the all share index closed at 66,882.64 points. That's a minus 0.66%. However, yes, it was yet another bearish session on the floor of the Nigerian Stock Exchange due to profit taking by investors. All share index dropped, as I said earlier, by 0.66% to 66,882.64 points from the previous close of 67,324.59 points. Now, that's the same thing that's happened. Since we were maintaining that position, it's going down. It went down on Friday. It went down on Thursday as well. Hopefully, it will look better at close of business today. Now, our market capitalization equally declined at 0.66% to close at 36.6 trillion naira from the previous close of 36.847 billion naira. That means it shed 242 billion naira. Now, our volume units of trades was about 408 million units of shares that were traded in 7,707 deals, valued to be about 5.4 billion naira. Now, when we compare this to Friday's trading, we can see that the data showed a 60% decline in volume, a 25% improvement in turnover, and 21% improvement in deals. Now, when we have 119 NGX listed equities that participated in trading. Now, what does that show us on our gainers table? Now, 15 gainers. We had 15 gainers yesterday and 37 losers as of end of trading yesterday, making it the market breadth closed negative. Now, Ikeja Hotel closed at 0 naira 25 kobo, increasing by 10%. We see that John Holt closed at 0 naira 16 kobo, increasing by 9.70%, and Cornerstone Insurance closed at 0 naira 13 kobo, increasing by 9.49%. What is the look on the red table? Let's look at our red table as well. We can see that on the red table, Caverton Offshore Support Group closed at 1 naira 52 kobo, at 9.87%. It went down at 9.87%. Now, Access Corporation, Access Holdings, closed at 17 naira 25 kobo, losing about 9.86%. And Owando Limited closed at 11 naira 85 kobo, losing 9.70%. Now, how does this affect our top traders? Let's see the top traders and market movers. Surprisingly, Access Core, although it's on the losers table, is the most traded volume of trade at the market yesterday at 178.14 million units of shares that were traded yesterday, and UBA too, 104.93 million units of shares that was traded, and Unity Bank at 28.4 million units of shares that were traded. If we're looking at our top traders, we see that the banking industry had a lot of shares that were traded and moving. Let's see if that's going to affect our sectors. Let's go to the sectors table. NGX Banking went down at minus 3.81%, and NGX Industrial at plus 0.11%. Now, if you see the NGX Banking, it seems that the trading that happened, the top traders, either people were taking stocks or taking their shares or taking their profits and brought them down at minus 3.01%. That didn't actually help the sector do so well, although our top traders were all banks. Now, NGX Consumer Goods had a decline of 0.14%. NGX Oil and Gas, Owando, yes, was topping amongst our top three companies at 0.00%, just there, staying on the green, just there, and NGX Insurance at 0.18%. We had, of course, an insurance company in our gainers as well. Now let's move to the African continent and see what's happening, and it's all green today. Yes, it seems like Nairobi Stock Exchange is beginning to have some positive outlook. As you can see that the Johannesburg Stock Exchange maintained its green outlook, going up by 0.22%, closing the day at 73,398.78 basis points. Now the Ghana Stock Exchange maintained its position, maintaining green just there at 3,168.24 points at 0%. Same thing happened to the Nairobi Stock Exchange. It maintained position as of Friday at 96.73 basis points at 0.00%. So hopefully, Nairobi starts seeing a positive and upward trend. And that's the much we have for you on our stock update. When we come back, we'll be looking at bad debt and loan recovery in Nigeria. Do stay with us. We'll be right back. Welcome back. Thanks for staying with us on Business Daily, reaching you from Trust Television here in Abuja, Nigeria's capital. Now, I said earlier before we went on the break that we're going to be looking at bad debt and loan recovery in Nigeria. And there's so much when it comes to that actual topic, Now we have the AMCON situation, we have the Anchor borrower situation, we even have the Forex situation with Central Bank and DMBs, that is deposit money banks, and how they've not been able to get their over $10 million worth of foreign exchange being paid back to them. Now, with me to discuss this virtually, he's joining us virtually, is an economist, Steve Nwachukwu. Mr. Nwachukwu, good morning. Can you hear me?
Yes, good morning and thanks for having me.
Thank you for joining us and taking the time. Now, we have a debt situation. Now, yesterday on the program, we looked at the issue of our debt, our foreign debt to other countries, to financial institutions, and while the numbers were staggering. But now we have internal debt. And I'm not talking about domestic debt where the government is owing companies. No, it's the debt that is being owed by Nigerians or corporations in Nigerians to Nigeria, to the federal government. So I'm going to start off looking at the AMCON situation, where AMCON is saying that it has been only able to get just 70% of all the debts that it was created to go and get, just 70% of this. Now, AMCON was created in 2010 for this purpose. What do you make of that?
Okay, thank you once again. I think the issue that has to do with debt, for better understanding, is to go through what the CBN already has outlined as a prudential guideline to classify the levels of loans and what it means to say a loan is bad loan or what it means to say a loan is a performing loan. On the issue of the APCON was primarily staked up to recover bad assets. Now it has gone beyond the performing or the watch list or from the substandard or to the doubtful, but to the loss position. That is what AMCON was primarily designed to tackle: the loans that have totally gone bad, the loans that you classify as a bad or as a loss. APCON primary function is to go after those individuals and corporate organizations and make sure that their assets are seized, sold, or leased, or whatever form to recover those loans. Because if you remember that in 2008, 2009 to 2010, prior before the APCON was set up, we had what we called a global recession or a global meltdown, where we saw what was going on in the housing issue crisis in United States that led to the global meltdown. And we witnessed and saw a good number of national banks or Nigerian banks were either nationalized or were collapsed or liquidated, in the sense that they ran into issues with the loans, default, and the size of the defaults were overwhelming for these banks that some of them couldn't survive those periods. So that was the essence of the APCON was set up. So to recover such loans that Nigerians, corporate organizations, businessmen are owing the banks that led to the fail or the liquidation of such commercial banks. So having achieved 70% of what they were actually set up to do, I think is a kudos. The rest of the 30%, I'm sure they are still on the neck of such individuals or corporate organizations to make sure that at least they attain a 90 to 95 or 100% recovery of such loans. But coming back to the current issues that is going on in our national bank, given the fact that we started seeing some level of exposures of commercial banks in the recent days. In fact, the last data available shows that close to 1 trillion naira has been provided as either bad loan or as an impairment by the commercial bank. About 4 or 5 first-tier banks have made this provision. Recently, if you witnessed why Access Bank was on a loss yesterday at the nation's capital market, is as a result of their second quarter financial statement that was made available. Close to 218 billion naira was made available or was recorded in their books. Now, if we have to also go back for a better understanding of our viewers, there are in the CBN Prudential Guideline, which is actually meant to ensure that there's level of stability in our financial system, some level of credibility in the way and manner commercial banks dish out loans, both merchant bank and microfinance bank. That is what we call prudential guideline for risk assessment. So in this very guideline, you have to declare the status of every given loan or facility you have given to both government, parastatals, state subnational governments, corporate organization, private individuals, and others. So the guideline states that you can assess a loan facility either as a performing loan, one as a performing facility. Then you can also classify it as under watch list.
Okay.
And the last is that you will now say this loan is either non-performing. So what does it mean to say a loan is performing? It simply means that...
I'm sorry to cut you in, because I can see that you want to give us an economics class, and I really would, want to know more about this. But, you're saying that, Access Bank's shares took a hit because they put out their report and saying that, okay, this was given out as loan. I believe that's what you're trying to say. Now, is it safe to say that if banks want to do well, they might have to limit the way they churn out loans, seeing as that's the only supposed way that they make money, or one of the ways that they make money? How do we, I don't know, how do we balance that?
Thank you so much. In as much as it is their primary responsibility as a commercial bank to aggregate funds, and that's the main function of the CBN, to actually channel funds. So the commercial banks are all there, take money from people as deposits and lend it. There's no other business that the commercial banks or merchant banks are in for. Take deposits, channel those deposits to critical national needs of the people, both corporate, government. So that's why commercial bank can loan, merchant bank can loan, microfinance bank can loan either to government, they can also loan to private corporate entities, and they can loan to individuals. So when they have those deposits, there are criteria, there are basic prudential guidelines when you are giving out this loan. That's what that CBN guideline intends to govern the space of lending, so that you don't just give money to Dick and Harry and Tom. There are guidelines to actually guide you when you give out these loans. And also there are guidelines to classify when that loan goes bad. There are 3 layers of bad. Like I said, there are 3 layers of assessing a loan. One, if the loan has performed, the principal and the interest has been paid within 30 days.
Okay.
Then the second is if the principal and interest has been paid within 90 days or 91 days. Then the third one is above the 90 days. So you make provisions. That's why you saw in the financial statement of about 5-6 first-tier banks, they have provided more than 1 trillion as bad loan. So the concern of CBN and the concern of most of us is, why is the banks being exposed once again? In as much as we have economic hardship, we need some level of stability of our commercial banks. Why are they being exposed? You can't take away the hike in interest rates.
Sorry, Nwachukwu. So basically, what is the government doing to avoid a 2008 reoccurrence? Because that happened. I have personal experience. I had someone who was working in the bank, and due to what happened, she had gotten to branch manager. She lost her job, and they couldn't even, get another job because she was seemingly overqualified. So it's just a way. It doesn't just affect the banks themselves. It equally affects people and their livelihood. So what is the CBN doing now? I'm going to tie it up because one of us round up on AMCON, so we can go to the ANCO Borrowers Program with this last question. Now, according to Ahmed Kuru, the managing director and CEO of AMCON, he's saying that most of the issue is the interest. So according to what he says, we have so far recovered 3.9 trillion, both from the sinking funds, which is a contribution from banks, and the recovery we made was 1.4 trillion. And that is, the situation is, as we are recovering, there's also interest element. So he's saying that the interest is mostly what's making it look like they're not making headway. What do you think about that?
Yes, like I was trying to lay the essence of or the why the contributory factors why some of these loans goes bad is as a result of the hike in interest rates. Beyond the hike in interest rate, it's also the business environment is becoming so hostile for businesses to strive. It's becoming hostile for businesses to repay their loans. When you have a double-digit interest rate, it affects businesses. The banks are lending over to 31 to 33 to 35. In fact, the minimum you can get is around 27% per annum. That is what currently the commercial banks are lending to businesses. So how on earth will a business survive within such hike in interest rates? So that's why we're calling on CBN to be mindful of the hike in interest rates.
So that means we're hoping that in the deferred MPC meeting, they would do well to know that decisions they're taking is affecting not just everything, affects everybody, plus the banks, therefore the businessmen, therefore the consumer. It's a chain reaction that's happening. Okay, thank you on that. Now let's move to the Anchor Borrowers Program. Now we have conflicting reports. IMF said a few weeks or months back that only 24% of the CBN Anchor Borrowers loan has been repaid. However, the Apex Bank comes in later to say that no, that's not true. We have gotten about 503 million of loans back, which is about 52.39%, of total loans collected by the farmers, meaning that according to the CBN, 47.61% is unpaid, as against the 76% quoted and released by the International Monetary Fund, IMF. Why is there this disparity and this disagreement? How is it possible? I don't know. Will I say who's not saying the truth? Because what's happening?
But the same as I'm wondering who is saying the truth now. Who do I believe? Do I believe the CBN or the IMF? I think I will rather employ the CBN to be more transparent, to open up his book. That's the only way we can know who is actually saying the truth. And I intend to, lean to the side of the IMF and most of us who have actually faulted the way and manner CBN carried out its dishing out of this very close to 1.1 trillion naira on Anchor Borrowers Fund or Anchor Borrowers Program or Anchor Borrowers Scheme. So there is no transparency. We found out that 70 to 80% of individuals and corporate organizations that CBN actually gave these very loans to were political portfolio farmers, people who had no farm on ground, people who are not into farming, but they use that period as a bazaar to compensate politicians. So I think that's why IMF report seems like is a truth, because 60 to 70 to 80% of those who receive this fund we are not actually true farmers. How do I come to that conclusion? It's because in 2022, in 2023, and even late 2021, when those grains are needed to be available to Nigerians, we couldn't find the grains. There are no additional silos built where those storage of grains were. The cost of these very grains continues to rise.
You can't say that. We saw the president, show us, I think, rice pyramids or something last year. So you can't say that there are no silos. They went out and they built rice bags.
My sister, the issue of the president coming out to show you rice pyramids or whatever pyramids are for media hypes. The real things are when you go to the silos. That is where the rice and grains are meant to stay. It's not in pyramids, a show. It should be in silos, and it should also be available in the marketplace. You could only see the ones.
Opinion. Except you've done your investigations and you have something to show for it, I will stick to this as your opinion. But let's just move away from that before.
No. Let me respond to that, please. Let me respond to that. Why I said what I said. You have to also be practical. You know, in investigative journalism, but practically you could also find that there are no grains in the shallows. It was just that media hypes, because the prices of these grains in our markets are currently very high. That is why it should be concluded that there was nothing found in our silos. Remember, the essence of this very anchor borrowers program was actually to reduce the price of these grains in the market. If the grains were available, the prices will not be high as it were in the markets.
But we, you know, I would like to go into this with you further, but we know time is against us, so I'm just going to move away from it. Just you know, in a sense, because now from what you've said, I can't ask my next question, which was, do you think the Anchors Borrowers Program has actually worked? But what you're saying now, your opinion, you don't think it has worked. But now, what are the strategies that government can implement to recover this money, these loans? Because I'm thinking, I tried to do a research to see where did the funds for the Anchor Borrowers Program come from. So hopefully it's not a loan we collected from someone that we need to now pay back, I know. So just quickly, just tie it up for me. What do you think the government can do to get back their money?
First, the CBN has to come out clean. CBN has to just come out clean. Tell Nigerians, tell the world who you actually gave this money to. Then apply the necessary, available, relevant rules or laws in your guidelines of giving out loans. If you need to go and start seizing the assets of these very farmers or to take over those farmlands, that's what the law says. If the law says that if you fail to pay back, what it simply means that what you use as collateral will be seized or be taken over. If it's the collaterals are those farmlands, CBN to quickly start going after it.
We'll have you coming, maybe subsequently to come and let's talk more about bad debt and loan recovery in Nigeria. Thank you so much for your time on the show this morning.
Thanks for having me.
And thank you so much for joining us and staying with us on Business Daily here on Trust Elevation, reaching from Abuja, Nigeria's capital. Before we go, do not forget to follow us on all our social media platforms and view and watch this program and more and news on our YouTube live stream. I am Chiamaka Nwafo. See you here same time tomorrow, same place. Stay safe and spend wisely.